Hello there, happy Friday afternoon. We are here live, and just like we planned, we are going to talk today about reverse estate planning. What the heck is reverse estate planning? What am I talking about? Well, first, let's see. Traditional estate planning, it was designed originally for people to minimize their taxable estate, right? So basically, the oldest generation with a lot of assets would give those assets away out of the estate, trying to they would set up trusts, different structures, trying to minimize their taxable estate, which will be left behind when they pass away. Well, with our current tax laws, the exemption is pretty high. Right now, it is $13.6 million. So, not many people have to worry about leaving behind a taxable estate, right? So now for regular people, middle class savers, estate planning pretty much involves setting up the trust correctly, putting assets into the trust so our assets don't go to probate and our heirs can enjoy our legacy. All right, so why are we talking about reverse estate planning? Well, because we want to take advantage, we don't want to waste this wonderful tax opportunity which we have here right now. Um, with reverse estate planning, we are going to do the opposite thing. We are going to fund the oldest generation estate and when they pass away, will inherit more assets from that estate because there will be no estate tax anyways. Why are we doing that? Well, because we inherited assets, when somebody inherits an asset, heirs receive a step up in basis, right? So you can sell this asset without paying capital gain taxes. And even if there is a capital gain for some reason, by default, the tax treatment is a long-term capital gain, which is much more favorable than ordinary income. All right, let me give you an example of what am I talking about. Let's say you are in your 50s, 60s, 70s, and your parents are still alive. And you have shares of some company, ABC company, you purchased for, I don't know, 50 cents a share. And now the price of these shares is $50 a share. So if you sell those shares of that ABC company, you will have a pretty high capital gain and you will have to pay capital gains taxes on the sale, especially if your earned income, if you are still earning income and it's rather high, then you will have to pay tax and maybe a lot of tax, right? So what can you do? Well, why won't you gift those shares to your parents? Yes. Side note: these are when you the gift recipients do not have to. The gifts are not taxable to them. They do not have to worry about taxes. If this year in 2025, each person can gift up to $18,000 to another person. So each person can gift $18,000 to each gift recipient. It could be 5 people, $18,000 to each of them per year. So let's say you have a spouse, you have 2 parents. So you can give $18,000 to each parent, 36. Your spouse can give $18,000 to each parent, 36, $72,000 worth of stock. And then when your parents pass away, whatever the value of the stock is on that date, you will inherit those shares at their fair market value, and that will be your cost basis. So now you can sell them and you probably will not have to pay any capital gain taxes. Well, granted, it's not that simple and easy. Please do not just go ahead and start gifting your assets away to your parents. Talk to your CPA, explain to them what you are doing and why. Okay? So, those are the stocks. What if maybe your parents have big giant IRA accounts and they take the required minimum distributions every year? Yes, because the required minimum distributions, they pay taxes on those distributions every year, but they don't really, first, they don't want to deplete their IRAs because they don't want to pay more taxes than necessary, and they want you, the children and grandchildren, to inherit the legacy, the money, right? So why again? We, the heirs, we can plan for what we inherit. Why won't we help our parents to convert their big traditional IRA into a Roth IRA? Yes, your parents will have to pay taxes on that conversion, but maybe they're in a lower tax bracket now than you are. You can make a gift to your parents, cash, right? So they can pay taxes on that conversion, and once they pass away, you will inherit a Roth IRA, not a traditional IRA. A Roth IRA will come to you tax free. You can grow it according to current laws and the current code. You can allow it to grow and earn for 10 years. And then you will have to distribute it, but all this will be tax free. So that's what we mean when we talk about reverse estate planning. Instead of the oldest generation planning for their heirs, what their heirs are going to inherit from them, why won't we, the heirs, will take our destiny in our hands and plan on what we inherit in reverse? Nobody says that children cannot make a gift to their parents. You absolutely can make a gift to your parents. So, again, though, please don't run and start making gifts and converting your parents' IRAs on your own. Talk to your CPA. Make sure your CPA has imagination and understands what the idea behind it. Talk to attorneys, talk to your parents, obviously. Make sure that this makes sense. Maybe, oh, real estate. Yes, a lot of people feel stuck with their real estate because, yeah, in California you might have bought your house for $200,000 and now it's worth 1.5 million. And oh, if it's rental property, it's probably fully depreciated, and if you sell it, all the proceeds will be taxable. Again, there is a plan for it. It's not very simple and easy, but real estate can be treated, can be reverse engineered, reverse planned as well. Well, anyways, so this is my tip today, our tip today for the reverse estate planning. Just an idea about how to manage your and your parents' investments to avoid higher taxes in the future and take advantage. Most importantly, we have unbelievable tax advantage right now. The tax laws are so favorable to us. So let's take advantage of it and take some action. So in the future, we'll enjoy the assets tax free. All right. Again, this video is not intended to be a tax, financial, or legal advice. This is just general idea. This is our opinions. No endorsement from the government or any organizations. Just Serenity Wealth Management expresses our opinion. If you want to talk more about it, we'll be happy to. The contact information is in the description of this video. If you get the email and got this video invitation through the email, then it is contact information is in the email. Reach out, we'll talk, we'll see what the plan could be. All right, until the next week, have a wonderful weekend, have a wonderful week, and we'll see you next time.